and then what is the process to buy insurance or sell insurance. I'm going to cover that as part of this session, and then basically how we implement insurance in software. Right? So I'm going to cover all of these things. Um, any questions or any basic idea you guys might have on insurance, and guys kind of want to mention any one of you? Uh, have you guys worked on in insurance domain earlier, and what is your definition of insurance, and what is your understanding about insurance? If anybody wants to share before we start. Kirti, Gaurav, what is our understanding on insurance?
Can I say, sir?
Yeah, please do.
Sir, basically insurance is a way to manage your risk.
Correct. Uh-huh.
Like when you are insurance, you purchase unexpected financial losses. Like you have to manage like that. Financial.
Great, great. So I think, yeah, that is a good definition. Anyone else want to mention anything? Okay, so let's go ahead and start actually. So before when I'm starting, right, I want to mention why we have insurance from two perspectives. One is from the customer who are buying insurance, right, from that perspective, and other from the people who are working on selling those insurance and developing those projects in insurance domain, right, from that perspective. And as a developer, why should we worry about knowing insurance, right? All I as a developer, most of the time what happens is I only care about writing the code. I only care about writing the classes. I only care about writing the methods. I only care about writing the unit test cases. But most of the time, as a developer, I don't know why I'm doing it, right? When I'm writing my code, I don't know the perspective of business side, why business need this requirement in first place, right? All of those perspective I'm going to talk about. So let's start from the very first slide. Why developers must have the knowledge of insurance domain, right? When we are as a developer, I'm developing a software, I'm developing a product in insurance. Why is that? I must know what insurance is, right? So start from the very basic. When we are developing a project, the first thing is that we will have to design a project, right? And for that designing, I think these days design have quite a lot simplified from the earlier designs what we used to see. And why? Because earlier we did not use the domain knowledge when we designed these softwares, right? But nowadays, the designers of any product, they also must understand what the business is wants to do. When I say business, right, the business is the people who are trying to solve a particular problem, right, in the market. And as a developer, I am developing my software for them. Okay, so for us, right, when we are working in insurance, insurance is my domain I am working on. It's a business domain that I had to solve the problem for, right? Similarly, if some people are working in the banking projects, their domain becomes the banking domain. Okay, and there might be some people who are working in the hospitals or healthcare projects. Their domain will become hospital. So when I'm designing my software, right, or when I'm coding for that matter, right, why is that I must know my domain? Because if I know my domain better, if I know my business objects, right, then I would be better able to write my code and also better able to design that particular software. If I don't know,
Okay, Prabhuji, just sorry for the can we record this?
It's being recorded, yeah.
It's being recorded.
Yes.
Yeah, it's in progress, Vish.
Oh, I'm sorry.
Sure.
Sure,
So
thank you.
So I'm trying to tell here, like, why as a developer I should know my insurance domain, right? And for the very basic reason is that when I'm designing my software and when I'm coding my software, uh, if I have the domain knowledge, I will code or design the software accordingly. And as a domain, if I understand my objects, right, how they are interacting with each other, and what are the events taking place in the business term, right, I would be better able to design the project. Okay. So this is why this domain-driven design is getting famous. Actually, it is famous already, and most of the designs, if you will see, that are domain-driven designs. First, as a designer or an architect, I understand my business, uh, that problem the business is trying to solve. Understand that knowledge, and based on that, I design my software. Okay, this is what is called domain-driven designs. Okay, and I'll tell you one interesting story. I was working with this Fortune 100 insurance company, and I was on site. And then I was working with BAs, and there were a few architects, and there was the Scrum Master, and then POs. They were all were talking together, and they were all talking in the same language, and which I could not understand at first, because it was a language of business, and the business they were in was insurance business. Okay, so my next slide actually basically talks on the same idea that when this domain expert, there are people who are working on a project, right? There will be some domain experts who know the business domain, in this case insurance domain, and then there will be some business analyst who will be analyzing the requests or the requirements, basically for that particular project. And then there will be developer or QAs who will be working in that project. All of them, they talk the same business language, and we are calling that language as ubiquitous language. And this is why it becomes really important that, as a developer also, I should understand that business language, so that I can communicate or I can write my code in this language so that it is understood by everyone, right? If uh, uh, if a business analyst can talk to business, right, business only understands the business language. So when you go and talk to a business guy in insurance, they will talk about all those things: reinstatement, cancellation, endorsement. Basically, these are all insurance terminologies. But as a newcomer or as a new developer in the team, I might not be familiar with that language, and this is why it becomes important that I understand that language first, and I will be better able to code in that language once I start coding for that insurance, that domain. In this case, insurance, right? So if you understand this business domain, insurance domain, when you go and write your class, you will write that class name based on the business functionality, and not just say XYZ, right? Similarly, when you write your variables of the class or the methods of the class, you will use business terminology on what this method is trying to do, what this variable is used for, and accordingly you will name that variable or the class method. And the benefit of doing that is, anybody looking at your code who understand business, they don't have to be basically coders, right? Even the business analyst looking at your code, by reading at the class name or the method name, they will be able to relate, okay, what is this method doing, what is this class doing. This becomes very important that, you know when we are implementing an insurance project, we must know what is insurance, right? And only then we will be able to write a better code in the sense which is understandable by anyone who is looking at the code, and not basically a developer only. Any questions on ubiquitous language or domain-driven design? Why it is necessary for us to understand, right? When we are working in insurance industry, uh, any questions till now? Okay, not then. I'll take an example now. If you guys understand this ubiquitous language and you understand what is domain-driven design, why it is necessary and why we do it. Uh, so let's take an example of hospital industry. I won't directly jump into insurance industry. I'm going to talk about more basics before we talk more details in insurance. Let's, for an example, take hospital as an industry and try to understand their business. Once we understand like what a hospital does, right? So basically, what a hospital has, it has doctors, it has nurses, it has patients, it has a building, right? All those things once we identify. So what as a designer I have to do? Suppose if I'm architecting that project for a hospital, and I understand that domain, right? The domain is nothing but there will be a hospital, there will be beds, it will be treating some sickness, right? All those things I identify. Then basically I come and design the UML design diagram based on the business domain knowledge I have. Okay, I at this stage I don't need to understand how I'm going to code, right? But have but at this stage I can understand like what is my business, and I can basically draw the classes what I'm going to have. So in a hospital we are going to have persons, and the persons basically are no one but patients, or it could be staff. Staff could be a nurse, or it could be a doctor. Then there could be administrative staff, which is front desk, and similarly there could be technicians, technologists, and the lab guys, and all those things, right? So if we understand, so see how simplified my design becomes. If uh, I understand my business, like if I understand the hospital industry in this case, as a designer, it becomes super easy for me to design this software for them. And this is why in our industry also, like once we understand uh, insurance, it would be super easy for us to implement that project, or even from development perspective, or either from the design perspective. Okay, so till now I'm trying to tell you guys like why uh, you must know insurance before you start coding in insurance as a developer or as a QA, right? you So any questions on why insurance, why you must know insurance before you are starting coding or testing in insurance? Any questions till now? If this is clear, then we can actually jump into what insurance is, right? And at the start of this meeting, I think the person really actually gave a very good definition of what insurance is. So if you see at the basic idea of insurance, what an insurance company is trying to solve, right? There is a problem. There is a problem of risk. So let me give you an example. So suppose you are driving a bike, right? So driving a bike is riskier. If you are going on road, there are chances that it could there could be some accident or some is happening, right? Which is not wanted, but there is a possibility that it could happen, right? So that is a risk for me, and there are various ways I can manage that risk, right? And there are standard four ways actually how we can you know uh, do a risk management. First of them is like we can risk assume that there is a risk, and I can control. I can control it in the sense that if I'm going on the road on a bike, can I put all my safety guards? Can I put a helmet and all the other things which is which can safeguard me in the case of an accident? So this is risk assumption. The other thing is risk avoidance. Can I avoid that risk? Now avoiding risk is good, but it is not practical in many cases. Like risk avoidance is like if I had to go on road and drive a bike, better that I stay at home and I don't drive the bike at all. That would be risk avoidance, but that is not practical at times. You have to go out and do some stuff. Uh, so the risk avoidance is one of the management technique, risk management technique, but it is not practical at most times. Then there is risk retention, basically where you accept that risk and you don't do anything about it. Like you don't wear helmet, or don't take any protection measures, or you don't do any safeguard and then go on road and drive. In Hindi, we say Ram Bharose, right? So that is risk retention, and the other technique, the fourth and final technique, is risk transfer. Now, what is this risk transfer? And this is where the definition the guy was telling us, right? Where we transfer the risk to some other entity. Okay, I'm going on the road on a bike. What if somebody can own that risk? Instead of me owning that complete risk, can I completely or partially transfer that risk to somebody else? Okay, so in this is where the insurance will come into picture. Okay, as an insurance, as a business, I identified that there is a problem that people are looking for risk transfers, and as a business, can I take that risk and try to insure people? Okay, so let's go ahead and see the risk, the insurance definition now. Any questions still on the risk management? And I think this risk management is applicable throughout our software development, and it is not just for insurance. The insurance I gave you, this risk management I am telling here from the perspective of insurance as a risk transfer, but this is applicable throughout our software development. Okay, so let's talk about insurance now, and the simplest definition I could get is this one. Insurance is nothing but a risk transfer financial product between two parties. Just let it sink. Insurance is a risk transfer financial product between two parties. Okay, so there are many keywords here, and we have seen what is risk transfer. Basically, I have a risk when I go out on bike. Uh, can I transfer that risk to somebody else, some other entity? That is risk transfer. And then there is the keyword financial product. Now, this is nothing that physically is going to take up that risk. Like if you are going to have some accident, some other entity can have that accident. No, you are transferring the risk only in the financial product terms. So somebody is going to accept the risk in financial terms only, and not otherwise. Nobody is going to have an accident for you in place of you, but they can own the financial risk arising out of that particular risk. And now it says that it is a financial product between two parties. Now there is one party which is under risk, and the other party which says that we will own up the risk, and we will provide you the insurance, and you pay us some insurance, and that party is an insurance company. Right? Suppose, for an example, LIC, and I think most of you might know what is LIC. LIC is a life insurance company of India, where they are insuring a person's life, and if something happens to the person, the nominee gets a good amount of money, right? So basically, they are only insuring the financial part of it for the risk, and there is no other liability they have. The only liability they are going to cover is the financial liability. Okay. Any questions on the definition itself? What is insurance? What is the problem that some clients I hear that some people are working for bankers, others are working for some other company, GLIC. What is that bankers trying to do? What is that GLIC is trying to do? Basically, they are the insurance companies which is trying to sell insurance to other parties who are at risk, and they are trying to own up that risk. Okay, understood?
Yes, Ajay.
Okay. Okay, so let's move ahead and see. So risk pooling. In earlier days also, so I wanted to give this as an example. In earlier days also, that we had some instances of insurance, but those were not as practical as we have it today. Like we have proper insurance companies these days, like LIC, and there are other companies which is selling general insurance products like the motor vehicle or your house insurance. and you name it, there is an insurance for it. Right? So early days also, how it used to happen is, you know, so we call it risk pooling. So how people were managing this risk earlier. So as an example, suppose in northern India, right? I see there's there are if you go in the remote side, remote villages, what you will find is that if there is a wedding happening, there is marriage happening, uh, and especially in case of girls, right? The entire village people will come and they will start, they'll contribute some money, uh, because they see that the guy who is marrying their daughter, they are at financial burden. There is a lot of expenditures take place in case of girls wedding, and that is nothing but a risk pooling. Like they understand that there is a risk, and then many people come together and try to own up that risk, that we will contribute in some way, right? So similarly, in case of here also, like let's take an example of house. So suppose the one house goes on fire, right? And if you don't have any insurance, then basically you'll have to take a loan or manage the money again, right? And then you build out the house. What happens in case of a risk pooling is that many people come together and they contribute small amount, like 100 rupees, the $100 premium per person, uh, right? And there are suppose 1,000 people come together and they start they only contribute $100. It becomes 100 lakhs, sorry, $100,000, right? 1 lakh dollars, and then this becomes my pool. Okay, now this $10 million, so 100,000 people contributing $100 each, it becomes $10 million, and this becomes into my pool. And so suppose there are 100,000 people, right? 1 lakh people who are taking this insurance, and some uh, casualty happens for few of them, right? Then easily we can take out the money from this pool and contribute to them, and they can build a new house. This is the simple concept of insurance. I think I've simplified it enough. Any questions on risk pooling? Okay. Now, having understood insurance, let's try to understand why we have to buy insurance. Like as a person, what is my need to buy that insurance? Why do I need to approach insurance companies? Right. So first thing is that we need to understand that insurance doesn't reduce the probability of occurrence of adverse event. It is just the financial liability will be taken care by the insurer carrier, and there are no other implications they have on their side. Okay. So if you, as a person or a company, you want to cover your risk, you basically buy that insurance. This is the first instance. We have seen it already in previous examples, why we need to buy insurance. And in some cases, it is mandatory by law that you must buy an insurance. Even if you don't want to buy, there is no other way out. So suppose you are driving a motor or a bike on the road, there is no other way out, but you have to have an insurance, and because it is mandatory by law. So some of the time you are buying insurance because it is mandatory by law, and the other times because you want to save tax on your income, and that is the third reason that you are buying insurance, because it helps you save tax. Okay, let's go ahead then, and let's now talk about the popular type of insurance. We have actually multiple types, but general category, if you see, there are only two general categories. One is life insurance and one is non-life insurance, or we call it general insurance. Okay, a lot of you might have heard of Life Insurance Corporation of India, which is LIC, right? But there is also a General Insurance Corporation of India, which is GIC. Actually, later on, they had to convert into a reinsurance company. And I think in future sessions, I'll be talking about what reinsurance is. But for this session, main topic is insurance only. So, these are the two categories, the broad categories of insurance. One is life insurance and one is general insurance. Okay, and many people who are working in insurance, they, when you guys are going to create a code in EIS, right? You might have seen that there is a line of business. Have you guys seen that line of business? What is the line of business you guys are selecting for your product? Anyone can tell me what is line of business? Have you guys seen this line of business in EIS?
Yes.
Okay, so a simple example, like in EIS you have leisure and business, and then commercial lines, you have farm lines, basically where you are insuring the farm risk, right? And then you have personal lines, and you have benefit individuals. All of these are lines of business. Uh, and let me actually go back to my previous slide. This one, domain driven. Now we are having our designs based on the domain, right? And we found out that few of the product, like product and property and casualty, P&C, right? In insurance industry, it is very famous. Where you want to insure your property, right? Property and casualty, we call it P&C. Right? That all the products or all the insurance products which have the similar domain structure, they are grouped together, and they are developed. Their database tables are same. Their class entities, details, everything is same. So again, EIS has given us one more classification here. That other than this category, they have designed line of business. And line of business is nothing but, so suppose here motor and home, they will be combining it as one line of business. So your line of business is nothing but grouping of few products together based on the similar design, the domain they are working in. Okay. And in life insurance, I know that you guys are working on whole life, and I'm not sure if there's some of you are working on term insurance. Again, there are different type of life insurance, right? There is a money back where you buy a policy and you pay some premium, and so suppose at the end of the term or the end of the policy terms, nothing happens to you, right? Uh, and then you will get some money back, not not a great deal of money, but some money will be returning back. But in the term insurance, basically, you pay some premium to insurance company, but insurance company doesn't return back anything at the end of the insurance policy term. They keep all the money with them, but this money actually is a very nominal money that you are paying for your insurance. But in money back, the premium is very high. Okay, similarly, there are unit-linked insurance plan where insurance company will take your premium. They just don't do the pooling, right? So in this case, we saw that an insurance company will take all the money from you, and they basically have now 10 million. They just don't sit on this money; they further invest it so that they can get return out of it. So now 10 million, if they can invest and get another 1 million, right? So the risk pool will also keep increasing. So this is another concept of unit link insurance plan where all of the premium paid by a customer will be further invested in some other things where they can get more returns. Okay. Similarly, there are other life insurance policy, child insurance, annuity or pension plan, endowment. Right? These are again when we are working in EIS, you might be asked to develop any of the product. Like some of you guys are already working on whole life, and there might be some other plans you might be working on as well. Similarly, uh, in the non-life section, right, or the general insurance section, we have multiple insurances like your health insurance. Now your health is at risk, and for that you want to buy insurance, so that becomes health insurance. Similarly, your travel is at risk. So these days, even flights have started giving travel insurance. Even the train, right? They have started giving you travel insurance. just for a very nominal premium. And similarly, when you are driving your motors or the bikes, for that there is a motor insurance because you are at risk. Even your home is prone to fire or flood, all those risks. So there is a home insurance for that. Similarly, there are disability for PFG. One of the client we are going to have very soon. We are going to work for disability product, and then there is critical illness and hospital indemnity, basically where hospital expenses will be taken care by the insurance company if you are hospitalized for some reason, right? So these are broader level categories: life is insurance or non-life or general insurance. General insurance is further divided into line of business. If you see in insurance based on the common domain they might have. So like in this case, motor and home, it becomes one group because it's the same kind of risk you are going to cover. Okay, any questions till now? Okay, so let's go further and see how. So we have seen till now, we have seen why we need to know about insurance or why we need to buy insurance. Both things we have understood, and then also we have understood what is insurance, right? And now how to deal with insurance, like how these two parties come on the we in the definition we had seen like two parties sign an agreement, right? So let's talk about more details about insurance now. How part, basically how that insurance business happens. So the insurance business happens through a contract between an insurance carrier, which is a business company, which is an insurance company. Example could be LIC. So policy is a contract between insurance carrier and the person who is going to buy insurance. Okay, it doesn't have to be an individual. It could be an individual or a company which is buying insurance. Okay. So if you see, there will be an agreement executed between two parties, one being the customer, other being the insurer carrier, and they will list out all the policies term, like we are going to insure this cover. So suppose for an example, you are taking a motor insurance, right? What is that is covered in the policy, right? That will be mentioned in this document. So suppose fire and theft, right? Your vehicle is prone to fire as well. It is prone to theft also. But in when you are going to buy a policy, you are going to see like what are the coverages I am going to buy, and you depending on number of coverages as a customer I want to buy, insurer carrier might charge me more money. So simply like for an example, if I want to buy a basic motor insurance, which only covers third party. Third party in the sense which when I hit a vehicle, another vehicle, I just have to take care of paying it to that particular vehicle. Okay, and there is nothing else covered, like the fire is not covered in my policy, the theft of the vehicle is not covered in my policy. All those terms will be listed here, and if those are not included, and I'm only buying third party insurance, which means I am excluding the other coverages, which is fire and theft, then basically I'm going to pay less premium to insurer carrier. Instead of if I try to buy all the coverages related to my risk item, I will have to pay more money. Is this thing understood? Depending on number of coverages or the type of coverages I'm going to buy in my insurance policy, my premium will vary accordingly. Okay. And in insurance policy, one more thing I wanted to highlight here is that both the parties are signing here, right? From customer side, the customer who is buying the policy, they will sign. From the insurance company side, the people known as underwriters, okay, they will be signing the policy. Just know the term for now, and in future sessions I will also mention like what are the underwriter people and you might see a lot of code written already that you might have seen that it talks about underwriters. No worries at the moment. Just know that they are the people signing on the policy from the insurer carrier side. Okay. Any questions on what is policy in general? So again, if I have to define policy, it is a contract between the insurer carrier and the customer. Customer is the person who is going to buy that particular insurance. Okay, the person who is looking to cover the risk, and the insurer carrier is the carrier which is going to cover that risk for the other party. Any questions?
So one thing here, right, when Vijay says insurance carrier, it basically means the company which is insuring the risk of a person or a company or any entity for that matter. So carrier is something which is used. We don't say insurer. We call it as insurance carrier.
Right, because they are carrying that risk for you. You have transferred that risk from you being one entity to the insurer carrier. And that is why they are called insurance carrier, because they carry that risk for you. But only in the financial term again. Okay, just to be very clear. Any further question or comments on policy? Okay, policy actually all I keep mentioning premium, but I didn't give you guys the definition of premium. Anybody knows what is premium?
The amount we pay to get all the coverages mentioned in the policy.
Correct. So again, this is this amount here which everybody is contributing as an individual, right? Which is creating a pool for me. So this is my premium. Okay, premium is the money or the amount which I have to pay to insurer carrier so that they can own up my risk. So it is going to be in the risk pool account. Okay. So most of the time when you guys are working in the policy domain in any insurance solution product, it could be EIS or it could be Guidewire. Most of the time, policy and pricing. Pricing is actually the word for premium calculation. These come together in the sense that there will be one team working on policy and the premium most of the time. Okay. It could be different also, but most of the time, policy and premium will be one team because it overlaps. Lot of things overlap. Okay. So let's go ahead and see the other part of side, right? So when I say premium, right? So now as a customer, I have to pay some premium. We have understood that, right? If I want to transfer any of my risk, I have to pay some nominal amount to the insurer carrier. As an insurance carrier, how would I handle that? I would handle that as a billing. Like, so suppose if as an insurer carrier, so suppose I am bankers. As bankers, I have to present this bill for the premium amount which is I'm supposed to get from customer to the people who are buying this insurance. Okay. So suppose Piyush is a customer and he approaches me and I am bankers. I'm trying to sell policies, right? So he'll come and we will execute a contract between us that will become policy. But now, as an insurer carrier, I will present you with a bill. Okay, so I owe you this bill because I'm going to cover your risks. You pay me this amount, and this is we call in the insurance terms we are calling it a bill. And the module which handles all the bills is named as billing module. Again, I'm not talking specifically about EIS. In general terms, I'm talking. So this module is billing, which handles all my bills, which I have to ask customer to pay. Okay, and then I'll talk about these things also. But any question on what is a bill? This is basically a way I am collecting the premium from customers as an insurance carrier.
Yeah. So Vijay, one more thing which I would state here is the premium, right? So we have people like actuators, we have people who write algorithms which run in the background to give us a specific value for premium. So premium for me versus premium for, let's say, Kirti or Gaurav, who are much younger than me, would differ.
Correct.
So that also is one of the factors. And when we say underwriter, which is he's somebody who's understanding the documents, saying whatever insurance we're asking is has considered our reserves, has also taken into account our payback policy and all that, fund that into consideration, and then only I'm signing off, saying this is perfect. And then based on that, you get a bill generated. It could be annually generated bill. It could be quarterly generated bill and stuff like that. So you have different configurations in EIS you can do to have such configurations. Yeah.
Correct. So Piyush, we are going to talk about the actuators and the underwriters in more detail when we conduct the advanced insurance concepts. But here I was just trying to cover the basic concepts, like
Right.
Everybody should know what is insurance, what is an insurance carrier, and then what are the basic modules like policy, billing, and then we have claims.
Yep.
So,
Okay.
So as Piyush rightly said, right, this bill is presented to the customers that you owe me this much because I'm going to cover your risk, and you pay me this bill. What happens is, as Piyush mentioned, that this bill could be a yearly bill, or it could be quarterly or even monthly, right, depending on how customer wants to pay. So some customers prefer to pay monthly. For them, it could be monthly bill, but it could be yearly bill for others. So what happens in case customer doesn't pay? So suppose the agreement is happened, and now the policy is told, the customer is supposed to pay this bill, but for XYZ reasons, customer doesn't make the payment, right? What happens is, the system or the insurer carrier, they will generate an overdue final notice to customer. Okay, that you owe us this bill, and it is overdue, and if you don't make this payment by so and so date, your contract will be ended. That means contract will be ended in the sense, the policy which I sold you earlier, I sold you this policy because I was supposed to get a premium from you. But if I don't get that premium, I will cancel this contract, which is policy. Right? So I will cancel your policy, and you will not be eligible to file any claim on that particular policy. This is in short what is my billing module is supposed to do in any insurance product. Right? Any questions?
Vijay, like as you mentioned, like overdue. So you meant to say like overdue means is nothing but a like notice and in insurance?
Yes. We as an insurance company, they will send you, maybe most of the time it is a physical notice also, right? You will get a letter at your home for the address where you have specified in the policy, saying that I owe you this much amount for this particular policy, and this is the final date that you will have to make the payment, and after that your policy will be cancelled if you have not made the payment.
And again, actually, like you will be having some period of time, right, to pay the amount. Like if it is expired, like you have some 45 days, correct?
Correct. And actually, I'm going to cover that in advanced concepts. But just to give you a brief idea, we call it a grace period. So once, suppose you were supposed to make the payment, even after that you have not made the payment, after that you will get some grace period, 45 days. And after 45 days you will receive this notice. Actually, before 45 days you will receive this notice. They is saying that you are supposed to pay this much payment. If you don't, we will cancel your policy, something like that, right? But even after your grace period, there is some amount of time that they will cancel that policy, right? Even after they cancel your contract, they cancel your policy. Again, there is some more time given to customer to make the payment, and if they make the payment, we can reinstate the policy. Okay, reinstatement actually is an advanced concept in insurance, but even that period is there as well. Okay, even after grace period, there is some more time given to customers. Okay, any more questions in billing? Okay, let's now talk about the claims. Okay, this is very important module of insurance, right? And this is the precise reason that anybody wants to buy insurance, right? So in case of mishappening or the risk is happening, so suppose you had a motor insurance and your car have had an accident. In that case, what you will do? You will approach insurance company saying that I have had this much of loss on my risk item which is covered under this policy, and you make me the payment, basically, right? This is what is called claim. So you are claiming back the risk coverage amount from insurance company in case of a mishappening. Okay, this is the simplest definition I am giving. I am oversimplifying things for you so that you guys can understand. The very basic principle of any insurance, right? That any customer wants to buy insurance because they are covering some risk, and in case of any happening, right? And we saw it here also. Here in this thing, like risk pooling. If a few of the houses go on fire, basically you take the money out of risk pool, right? And then you rebuild those houses. Basically, what you are doing is these three houses or few houses which have had fire, they will approach insurance company, and insurance company they will take out some money from their risk pool, and then they will rebuild their house. This process is called as claim process. Okay. Any questions? What is claim? And if you guys have the medical insurance, right, provided by East to it, and in some cases, I think if there is some hospitalization, right, we file for a claim. Because of that sickness, we had to stay in hospital, and then this is our expenses. Please reimburse us. Okay, that is because you can claim your expenses or whatever mishappening you have had for the risk item covered. Okay, then what happens is once, so suppose there is mishappening happens and customer takes the pictures and all those things, right? Nowadays everything is digital, and they then go through the claim process. So they will submit the claim saying that in claim word we call it first notice of loss. So loss has happened, and for that loss, I want to claim my money from insurance carrier. Right? For that, I will submit as a customer. I will submit first notice of loss to insurance company, and insurance company now what they will do, right? They will verify that under this policy, did I cover this particular loss? Or suppose your vehicle goes on fire, right? But I did not buy the fire claim or fire coverage in my policy. Then insurance company will come here and say, okay, we don't see that you had bought fire coverage in your policy, so we reject your claim because it's not part of the policy contract to be executed. Make sense? But in other cases, like in the positive cases, you had bought the coverage and everything is good, and what will happen is that claim will be approved and you customer will be paid the money for which they had filed the claim. It's a simple process, but this is one of the most important module in EI in insurance world, right? Any questions? Okay, and we might have some projects in future for claim module in EIs as well. Okay.
Right. Prabhuji, do you want to cover first notice of loss and all that, or do you want to cover it in a different session?
Yeah, first notice of loss is nothing but you are sending. So suppose like in crime world, right? When some crime happens, you approach police station and you file a FIR, right? That FIR is nothing but the first investigation report. And similarly, in claim world, whenever some mishappening happens, we file FNOL, first notice of loss. Basically, you are notifying your insurance carrier that this loss has happened. Okay, and I'm filing for the claim that I have had this and this policy with you, which should cover my risk. So it is similar to what FIR is, right? And from FIR, then the case can go into the court, and from court it will go to higher court. Similarly, from FNOL, that is just a first notice of loss. That doesn't guarantee you that you will get the insurance claim, but it is just a first notice that you are notifying the insurance company, this loss has happened and I should be paid. Then insurance company takes that first notice of loss from you and verifies it against the policy document which you had executed, and then decides on whether this claim should be approved or rejected based on the information they get out of your policy contract. So it's just a starting process for your claim. Okay. Any other thing, Piyush, you want to mention?
I think this should be enough, claim, yeah.
Basically, there is a form also in EIS. Once we start going into EIS, then I can show you that form also. It's a simple form. Like insurance companies, they give it to client just to fill that form. Like what is the date of loss, what is the time of loss, all those things. What is the type of loss, all those things is a simple form. You fill that form and submit it. It will be submitted to the claim company, the insurer carrier.
Right.
Okay. So last slide I have is about the regulators. So in any field, like in banking, if you see, there is a regulator, which is Reserve Bank of India, RBI. What it does, it basically defines the rule around the banking system. How banking system could play, how much money the bank should have at a given point of time, what are cash reserve ratio. All those things are defined by RBI for the banks. Okay, because RBI is the regulator. It is my regulatory body, we call it. Okay. Similarly, in insurance domain also, we have a regulatory body, and we call it Insurance Regulatory and Development Authority of India. In short, we call it IRDAI. Okay, and in US also, like when you are implementing a project for the US based client, right? Then you might come around this word, the National Association of Insurance Commissioners, NAIC. This is again a regulator. The way we have IRDAI in India, the same way US also has a regulator, which is NAIC in US. Okay, and the job of this regulator is to define the rules for insurance carrier to safeguard insurers or the people who are buying the insurance policies, right? To safeguard their interest, we have this regulator. Okay, in case of a bankruptcy, if
Right. So these regulators will come into picture. They will validate the kind of reserves the insurance carrier has. in times of when they can they pay back the amount, right? Those will all come into picture when they kind of have somebody as the insurance carrier, right? So yeah,
Right. Because these are big companies, right?
right.
How an individual fight their cases against big companies? So suppose you had a right policy and now the insurance carrier is saying like we won't pay you any claim. What you could do that in that case? You can easily approach the regulator saying that I have had this policy and I have had these laws, but insurance company is denying me my claim. Okay. So a regulator is a must in India, and it safeguards customers' interest against big insurance companies, right? So this is the concept, and also they define the rules and all the regulations around insurance. So you might come around these regulatory bodies when you are implementing your project. So I just wanted to highlight that. So this is in short my everything about basics of insurance. Any questions, any confusion I have created, or any confusions I have removed, any suggestions, any feedback are welcome. You guys can always ping me also if you guys have any questions, or you can ask me now also. Yes, good that you stopped recording, right? Karthik Chandra?
Yeah, 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 sure.
Okay, you can stop the recording.